Steve's got an interesting bio as well. He started working as a floor reporter or runner on the exchange back in 1977. I was 3 years old, by the way. So he's been in the market a really long time. He left. He's been doing this since about 1994, managing money and with his approach to the marketplace. I've seen Steve talk in person a number of times now. Does a great job. Very excited to kind of bring him on. Let's go ahead and do that so I can get out of the way because we are running about 4 minutes over and we want to keep that on time. Steve, I hear you coming in.
Hi, Jeff. How are you?
Good. Did I do an okay job of introducing you?
Sure, yeah. You took away the intro. That's great. Now I have nothing to talk about.
Well, is there anything you'd like to add?
No, I just want to welcome everyone today and thank you for inviting me to speak. And thanks to Online Trader Summit. Today I have a great presentation for everyone today, where to find trending trade setups. Today I'm going to show you a great technique for really being in sync with the trend and being able to find these high probability trade setups. So thanks once again to Jeff and to MetaStock for inviting me here to speak today. Thanks to everyone for joining us today. As Jeff said, my name is Primo. I am the president and founder of Specialist Trading. And for those of you who are not familiar with my website or what I do, I just want to say first and foremost, we are an educational company. That kind of separates us from the rest of the pack because our only goal is simply to educate you as traders so that we can hopefully take your trading to the next level. Because as Jeff stated, I've been trading for nearly 4 decades. I started out my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Now, a specialist doesn't mean you're any better than anyone else. It just means that if you ever look at the old pictures, say Google of the trading floor, you Google some of the old pictures there with all the people shouting and screaming with paper all over the floor. The specialists were those traders behind those large wooden podiums that made markets in roughly anywhere from 50 to 60 stocks. I was a specialist for 9 years. I traded through the crash of 1987 and the bull market that followed after that. And as he stated earlier, I left the floor in the mid to late 90s to manage money and pursue my own trading. I traded through just about every market environment imaginable, straight up, straight down markets, sideways markets, quiet markets, crazy markets. So I know what works in terms of consistency, and I know what. So that's our goal at Specialist Trading, to simply teach you, not to force feed you signals and tell you what to buy or what to sell or what the perfect time frame is, but to teach you all of these tips and techniques I've accumulated in nearly 40 years so that hopefully we can mentor along with you and find something that works for you. Because once again, in my nearly 40 years of trading, the only thing I have found that works is sound, solid fundamental education, and then working alongside with you so that you can ultimately make your own trading decisions rather than relying on someone or something else to tell you what to do. Now, that can be even an indicator because a lot of people can just rely on a certain number of indicators and they can't make a decision until everything is crossed up over or whatever. So we really want to put the power back in your hands. Now today I'm going to show you how simple it is to really become consistent with just a few separate ideas and techniques that most of our members are privy to at Specialist Trading. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results in a lot of different markets using these techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we're required to show you this. As you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter if you haven't done so already. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down, at SPCLSTTRADG. I post a lot of free information on a daily basis, anywhere from actual signals that our strategies have generated to actual bits of wisdom that I've accumulated along the way. So the way Twitter is set up, though, it's rather limited information. So if you'd like to get more detailed, my sister site, which is Pro Trader Strategies, has put together a Facebook page, so you can simply log on to Facebook, go to Pro Trader Strategies, and there's a lot more detailed information about myself or about what we teach, some educational videos as well. Okay, so lots of ways to get more information about and find out what we do. Now, I want to start out by sharing with you what I learned trading on the floor of the exchange, because I make no secret about this, and I've often stated in many of my presentations that my first couple of years on the trading floor typical of the way most traders go through. I had a really disastrous year to an initiation into trading on the floor. I was following everything that I had been taught, reading all the books, going to all the seminars. We didn't have chat rooms or trading rooms then, but I subscribed to virtually every newsletter, and nothing was working for me. In fact, I almost thought I was going to get fired because I just couldn't, get on the right side of the market. I just was really having a difficult time. I was lucky enough to come in contact with a few mentors on the floor. These were actual specialists themselves who had been trading already for about 40 years each. And they basically told me that my trading was far too complicated. And one of the best things, I was listening to Barry speak before, Barry Burns, and he says the same thing. And you'll notice that traders who have been trading for a long time, anywhere from 20, 30, 40 years down the road, usually have very simple trading plans, maybe 3 to 5 rules. And the ones that have been trading for a relatively short time, 3 to 5, maybe even 10 years, are more complicated. They're difficult to follow and a little bit more subjective. Well, that's the way my trading was. I was virtually waiting with bated breath for every news event to come out. I was subscribing to every newsletter, and I had about 20 indicators plotted on my screen, and I was doing all the things I'd been taught, all the books, and nothing was working. And so my mentors taught me to really, simplify the indicators, the news, all the events I was following, and just simplify my trading. And that's how I started to become consistent. What they stated was, and I remember this, they said, Steve, as a trader, your job is only twofold. There's just 2 things you have to do. The first thing is you have to listen to the market, not to an outside source, so some guy on TV or some guy in a news subscription, but just listen to the market, the chart in front of you, and listen to what it's telling you, what direction it wants to go. And then your only other job is just simply to jump on board. That's it. Those are our main jobs, our main rules to follow as a trader. There's nothing more that we have to do. We don't have to decipher anything or have our trading too subjective. Just basically listen to the market, find out what it wants to do, and jump on board. So that's what I'm going to be sharing with you today. This is what I learned by trading on the floor. And one of the most simplest things you learn is that you want to be in sync with the trend, right? This is Trading 101. And everyone realizes that you have to be in sync with the trend. The only trouble is, if everyone knows this, why do most people have difficulty trading the trend? Because you will increase your odds for success by trading in sync with the trend, regardless of what method you're trading, regardless of what type of system, anything you want to do. You're going to have higher probability for success if you're simply swimming with the current at your back as opposed to swimming upstream. But once again, this is Trading 101. Everyone knows this, so why is it so difficult? Well, I think the difficulty lies in that everyone has a different idea of how to approach what the trend is. There are one ways to find out. Some people say, well, it's by the indicators lining up. Other people say it's by news. Other traders say, well, no, you have to look at the patterns, higher highs, lower highs, and so forth. The main thing is that most of these ideas and techniques are laggy. In other words, you find out a little bit too late. Let me show you some examples. Let me see if this looks familiar to anyone. Okay? We look here at this older chart here in February of H&R Block. All right, let's say you were interested in this stock. Your analysis says, well, I'm interested in buying it, but I'm not sure there's really an established trend. For all I know, it's going to roll over. We just kind of made a short-term top and we're rolling over to make new low. So you want to wait for a little bit more confirmation. So you give it about another week or so, and it continues to go higher. In fact, it looks as if you're making some type of high-level consolidation. So that's when you decide to jump in and buy, okay? Because you're have a validation now that you actually are in an uptrend. You jump in and buy, and look what happens. Does that look familiar to anybody? Okay, this is the way I used to trade roughly about 40 years ago, by the way. It just doesn't happen in stocks. We can look at the currency pairs. Here's an older chart here of the Canadian dollar. As we see, the short-term trend is down, but you want a little bit more, confirmation. So you wait. For all you know, you're making a little short-term bottom here. But it does go lower. So you say, okay, I'm going to step in and short, and lo and behold, we go right back up. The minute you get in to go short, it goes straight up, right? And it doesn't stop there. We can look at an intraday chart, a 30-minute chart of the E-mini futures. As we see here, once again, it looks like we're going up, but for all we know, we've made a short-term high and we're rolling over. So we give it a little bit more time on a 30-minute time frame, and it looks as if we are in a full-fledged uptrend. In fact, we've got a nice high-level consolidation going here. So you jump in and buy because you have a little pennant or a flag formation, and the minute you get in, look what happens, okay? Now, I know this probably looks familiar to a lot of people. This is the way I used to trade. I would always be a day late and a dollar short. And I think the majority of traders who fail, upwards of 80% of all traders, fail because of this. You're trying to be in sync with the trend, but usually we're just a little bit too late. And then every once in a while, whatever technique we're using will work, but over time there's really no consistency to it. All right? So we ask ourselves, what we need is an early trend detector, something that will tell us that a trend is just about to start or begin prior to, all of these, confirmations that we've been, told to look for. All right. Now let me tell you about what I was introduced to roughly over 30 years on the floor. This is the PET-D. This is probably one of our most popular as well as powerful tools we have at Specialist Trading. And what it is a proprietary color bar algorithm. Now, when I was introduced to this on the floor, what my mentors taught me about this formula, I had to calculate by hand. And it's not terribly complicated, but it's something that if you calculate, you can't calculate every 5 minutes and then get ready to calculate another 5-minute bar, because by the time you finish one calculation, the next bar will begin and it's too late. So we just used to use it on a daily basis because we do it as end-of-night trades to find out what the overall trend was. But now, because of high-speed computers and because of programming, some 40 years later, we've been able to make this into a proprietary color bar algorithm. So what it does is it simply colors the bars either green, which will tell you in a series of green bars that you're in a short-term uptrend, or red. And that's it. You don't have to figure out higher highs, lower highs. You don't have to look at a ton of indicators to cross over. You don't have to listen to some guru on TV telling you what he thinks the market's going to do. Remember, our job is twofold. We first want to listen to the market, and the market tells us what it wants to do. Now, the best translator I know of that translates what the market wants to do is the PET-D. Let me show you what I mean here. As we look back at these charts we looked at earlier, H&R Block, the minute we got into it, it went straight down. How could we have known that we were going to change trend? And even better than that, how could we have known prior to the tops being made that we could have been getting in a lot sooner? Well, you simply add the color bar tool, the PET-D, and as you see here, way back in the far left-hand corner, we already knew we were in an uptrend because the bars were already being colored green. And at this point, well before the bottom fell out, the bars were colored red, telling us that the trend now is changing to the downside. See how simple this is. How about the Canadian dollar? Okay. Remember, we were waiting for confirmation that it was going lower. Once we got in to go shorts, roughly about here, it turned around and went back up. How could we have known that a trend change was taking place? You add the PET-D. And we knew well back here that we were in a short-term downtrend. Why? Because the PET-D colored the bars red. And we knew well enough to get out and to switch sides, or at least to cover our short, once we had a confluence of green bars. And then we can go intraday as well. That 30-minute chart of the E-mini S&P, once again, we thought we were in a full-fledged uptrend, making high-level consolidation. The minute we buy, it goes straight down. Well, that wouldn't have happened if we added the PET-D. We would have known well back here that we were in an uptrend, but not at the very high, but well before we fell out of bed, we had a confluence of red bars here telling us either to get out or, if we were more advanced, to switch and now to go short. Now, the beauty of the PET-D is that it tells you which direction you should be trading. Remember, it's simply transferring, or it speaks the language and translating what the market wants to do. And once you know what the market wants to do, once you know what direction it wants to go, you can apply virtually any technique, any strategy, or any system to that direction. So in other words, I'm not going to sit here today and tell you this is the way you have to trade. You have to trade our certain system because it's the only thing that works. Don't listen to anybody else. No, I'm not going to say that. In fact, you have some great educators today that have some really great trading plans. As long as you know the trend, as long as you know what the market wants to do, you can add any one of those along with the PET-D, and we really feel that strongly you will increase your odds for success. Why? Because for the first time, you're going to have the confidence to know you are really in sync with the trend. So let's look at a specific trading technique, because I know a lot of you probably are saying, well, Steve, I'm new to trading. I don't really have any strategy or system. I don't have anything at all. Okay, we're going to share with you a high probability technique, or just an area that is a high probability for entry. This is not a full-fledged system or trading plan, so I don't want you to, I know the questions I'm probably going to get in the next half hour are going to be, well, Steve, where do I place my stop? This is great, but where do I get out? Where do I protect myself? How many, what's my money management? How many shares or how many contracts do I? That's all part of the strategy in the courses which we teach in our classes and which I mentor. But I'm just going to share with you a very high probability technique that you can start applying as early as Monday if you like, okay? But remember, it's not a system, it's not a full-fledged trading plan, it's just one piece of the puzzle, sharing with you where a high probability entry would be once you are in sync with the trend. And here's what it is. These requirements you're going to need are obviously the PET D to share with you that you know that you're in sync with the market, and then an inside day bar pattern. Okay, very common pattern, a 2-bar pattern. But for those of you who are not familiar with it or never seen it before, let's just give you a brief refresher course. It's a 2-bar pattern. Here's the common definition. Inside days are days where the chart bar has a lower high and a higher low than that of the previous day. All right, now that may be a little wordy, but let me show you a picture of what this looks like in this snapshot. This is what an inside day looks like. In other words, it's a 2-bar pattern. Bar number 1 has a range from the very top to the very bottom. Okay, bar number 2's range is usually inside this. In other words, the high is less than the previous day's high, and the low is higher than the previous day's low. Okay. Now, for all intents and purposes, it's called an inside day pattern, but this could be a 5-minute chart. It could be a monthly chart. You know, these could be monthly bars. They could be tick charts. It absolutely does not make any difference, okay? And what we're going to do is we're going to, stretch the rules a little bit to say that these bars do not have to be a lower high or a higher high. They can actually be lower or equal to. So in other words, they can be the exact same range. If you saw 2 bars with the exact same high and low next to each other, that would be considered an inside day as well, okay? So here's what we want to look for. If we want to go long, if we want to take advantage of a high probability entry point, here's what we're going to do. We want to look for both bars of an inside day pattern simply to be colored green. That's it, okay? There's no news we have to look at. There's not a ton of indicators we have to have plotted. There's not a ton of system rules, 20, 30 rules you have to follow that all line up. That's it. We just want to find that inside day pattern, that 2-bar pattern, and both of those bars need to be colored green. If we see this chart pattern appear, this is your signal that quick upward momentum may continue. So this is a high probability entry point. Remember, it's not a system. We're not giving you stops, where to protect yourself, not an exit point yet. This is just, for you to explore. Remember, we're an educational company. We're trying to educate you what to look for. So this is what we're looking for. We want to see the same inside day pattern, but both bars to be colored green. Now, obviously, this is for quick momentum upside, following after this 2-bar pattern. What if we are looking to go short? Well, we do the opposite. We're going to look for both bars of an inside day pattern now to be colored red. This is our signal that quick downward momentum now may continue. All right, so now if you see this, well, that's the market. Not some guy on TV or not somebody in a trading room, but the market is telling you. Remember, the only thing you should be listening to, the market is telling you most likely we're going to be headed lower. I didn't start to become consistent until I started listening to the market. Remember, as you've heard previously to me, most trading plans are extremely simple. Well, this doesn't get any more simpler than this in terms of finding a high probability entry point. Okay, and remember, it would not matter if this was a 5-minute bar, a 1-minute bar, or weekly bars. Okay, at the same time, it does not matter what the other bars colors are prior to this. All you have to find out is for this inside day 2-bar pattern to be either both colored green or, as you see here, both colored red. So let's look at some examples and show you how simple trading can be if we just simply follow that 2-step process of listening to the market, having the market tell us what it wants to do, and then jumping on board with this 2-bar pattern. All right, we look at this chart here in PPG. Someone looking at this will say, well, Steve, I don't really need an indicator or some tool, algorithm to tell me that we're in an uptrend. I mean, it's easy to see here in hindsight. that we've been going higher. I know we're in an uptrend. And that's true. But, that's after the fact. Wouldn't you have liked to know way at the bottom left-hand corner of the chart that you were going to be in an uptrend or sustained uptrend? You would have at least had some indication of that if you applied the PET-D. The PET-D knew all the way going back to February that we were in an uptrend. The bars were already being colored green. Okay? Now, that's not enough. All the PET-D is telling us, it's just translating what the market wants to do. We have to apply some type of structure which helps us to jump on board. The structure I'm teaching you today is that two-day inside day pattern. And if we look at all the chances you had to jump on board. Okay? In other words, picture the market not as some nemesis or something you have to battle each day. The market is more like a river that you simply jump in and swim downstream with, okay? You're not swimming upstream, you're not battling the river, you're simply having a great time sitting on your inner tube and going with the flow. Most people, for some reason, were taught to do the opposite. We want to pick tops, we want to pick bottoms, we want to fight the market. Look at the verbiage we always use. Oh, the market killed me today. Oh, I got killed. Oh boy, I won the battle today. Bulls, bears. Market is not like that. The market is simply a beautiful river asking us to join and come on board with it. The only trouble is we've been taught to do the opposite. So simply learn how to listen to the market. As you see here, the bars are all green. The market's telling you way back in February it wants to go higher. So we add a little structure in terms of our inside day pattern and jump on board. That's all we're doing. Now, we always tell our students, if you're going to use this technique, it's usually the first setup that gives you the most bang for your buck. So had you taken that first one back in February, well, that would have been 20 points in your favor. We're not saying you would have had a 20-point profit. Remember, this is not a strategy or system. But you had 20 points to work with as the market continued going higher all the way up into this third week in April. How about Netflix? Okay, this is an older chart in January, February, coming into March. Obviously, in hindsight, we're going lower, but wouldn't you have liked to know in the top left-hand corner that we were already in a downtrend? Well, you would have been able to know that if you had the translator, the PET-D, because it was already telling you the bars are red. And until we had 2 or 3 green bars, well, we're still in a downtrend. So even though you have up days, the PET-D will still color the bars red depending on what the trend is. Now, if we add the 2-bar pattern, look at all the chances we had to go short here. Once again, the market is always giving us chances. It's always saying, come on board, but for some reason we don't want to because we've been taught to do the opposite. We've been taught to fight it. A lot easier to be in sync with the market to find these high probability trend setups than it is to fight it. And once again, had you taken that very first setup back there in January, well, you had 20 points to move in your favor once again. And you don't have to just simply realize, some of these stocks are more expensive or a lot of people do not like to short stocks. We're not telling you, once again, how to trade or what to trade. We're simply educating you. You can apply any technique you'd like in terms of trading. A lot of our members trade options with this. They'll simply buy directional calls or puts, or they'll use some type of long or short strategy. It's up to them. You don't have to purchase the stock if you don't want to. Now, here's a great example in HR block again. This is a more recent chart coming into March and then into April. Now, someone looking at this would say, well, Steve, how can I have any idea what the market is doing with the sample size here? I've only got, what, 6 or 7 days that we're looking at. How would I know? I mean, and they said, well, take a guess. And most students, especially in the beginning, would say, well, okay, if I'm just looking at this sample size here, it looks like we could have some support. We're trying to make a bottom. And the last bar looked like we broke a short-term downtrend. So I would say we have some support here. Maybe you like to watch what the institutions do, and maybe it looks as if they're purchasing H&R Block here, so you like to follow them, to get your cues from. So I would, roughly say that most traders would say, well, you may have to take a shot here that we're trying to have a ledge here, some type of support. Okay. Remember, my mentors taught me not to listen to outside sources, to listen to one thing, the market. Remember, that's the first job as a trader. What does the market want to do? Not what does some trader think the market wants to do, not what does some institution or what does some system think, but what does the market want to do? And we add the PET-D because the PET-D translates what the market wants to do. So we forget about support, resistance, Fibonacci, all those things. We just simply add the PET-D, and the market's been telling us the entire time it wants to go lower. Why? Because all the bars are red. So if the market wants to do a certain thing, what's our job? We jump on board. Now, how do we jump on board in this scenario? Well, there's our two-bar pattern. There's the inside day right there. So the market is not only telling, it's screaming to come on board, jump on board, get your inner tube, come into the river, because we're going south. And look what happened, okay? Gap down 2-3 days later. Now, it wasn't as if someone in the company of H&R Block called me up and said, hey, Steve, why don't you send out an email blast to all of your students and tell them to go short our stock, because we're going to make some news announcements in the next couple of days, in fact, 2 days from now, and the stock's going to gap down. Okay? No one told us anything. We don't look at news at the specialist trading. We don't tell you that you can't, but it's not required in any way. So how did we know the market was going to go lower? The PET D told us it was in a short-term downtrend. If you're in a downtrend, you simply go in sync with the trend. All right, now we're looking here at ZBH, once again coming into this last week. Obviously, we've been in an uptrend, but if we apply the PET D, we could see that way back, as far back as February, the PET D was already announcing that we were in an uptrend. Okay, this was 20, 30 points lower. So all we have to do is look for that inside day pattern. Had you taken the very first one, you would have had 18 points to work in your favor in the next month or two coming into this past week. Now obviously, once again, we're not saying you would have made 18 points, but you had 18 points to work with. You could have gotten in and out taking a point gain. You could have taken 5 points, 10 points. That's how beautiful you can really be consistent once you're in sync with the trend. Let's look at this as we apply this to the Dow Jones Industrial Average, because it just doesn't work with stocks. You can use this as a market timing tool. Okay, this is the Dow Jones in February once again. Now looking at this, someone would say, well, yeah, it looks like we're in an uptrend in February, but how do we know, I'm scared about what's going on around the world. There's a lot of bad economic news. I don't know what's going to happen with the coming election, so I'm not sure I want to be long the market. Where is that information coming from? It's an outside source. We only listen to the market. What's the market telling us? Well, we had the PET D, and the market's telling us it wants to go higher. Why? Because all of the bars are green. Now we have to add a little structure in order to tell us when to get in, and that's the two-bar pattern we shared with you today right here. So right back in the middle of February, we got a really nice high probability entry setup, okay, within the trend to go long. It wasn't a reversal. It wasn't, making a top. The market was telling us we're going to be going higher. Even though it closed down that day, the PET D was still coloring it green, saying we're just a down day in an uptrend. So that was your signal to go long. And as we can see here, coming into this week in April, we've had 1,600 points in 2 months. Okay. Once again, you see how simple trading can be once you discard all of the outside noise and just follow that two-step plan. Listen to the market, and then jump on board with whatever the market wants to do. And if you missed that first setup, well, you had plenty more chances along the way. Now, here's looking at crude oil. I believe this is a monthly chart of crude oil. Okay, everyone's wondering where crude oil is going. Well, we didn't wonder that. We look back at last year in 2015 in February and March. We were already red. All right, so all we have to do is look for that two-bar pattern, and there it is, even on monthly bars. Back in May of 2015, they give you a great two-bar pattern right up here at the top, this inside day. Bar number 2's range is inside bar number 1's monthly range, and 25 basis points coming into March or April of this year. Now, that was a monthly chart of crude oil. Let's go to an entirely different market. Let's look at the E-minis, okay, for all you E-mini traders. And let's start out with a daily chart of the E-mini futures. Once again, we're looking back into February, coming into the beginning of April this month. We've been green the entire way up. So we've known, all of our students have known that the market has been in an uptrend. We've known this for ages, okay? There's no reason to think we're going to top out or try and pick a top. Until we get a confluence of red bars, we're going to stay green. I mean, we're going to stay long on a daily basis. And had you taken that very first setup there back in February, that's 170 points to the upside in the E-mini. And we're not saying you would have, but that's roughly $8,500 per contract if you had just taken the very first setup there. Let's go to a smaller time frame. Let's go to an hourly time frame of the E-mini. Okay, this was a while ago. I believe this was on the 7th of April. Now, looking at this, the first part of this chart, well, we were in an uptrend on an hourly basis, and you had a number of nice signals. Let's say you hadn't exited yet. Let's say you were hoping for the big move to the upside. Now this is on, once again, an hourly basis. Now, I'll show you this chart for the main reasons, once again, to share with you this technique, but also to show you that, it doesn't work 100% of the time. Nothing does. And in fact, if anyone in your studies ever says this technique works 100% of the time, I would run, because that's just not the way trading is. An athlete doesn't make every basket or hit a home run every time. Okay, an entertainer doesn't win an Oscar or have a hit movie or a hit album every time. Everything runs in cycles. So looking at this, let's say you had taken the very first setup on the far left, you would have said, well, I've got a great trade here, I'm going to stay long. But then look what happens. The market is changing its trend. Why? Because the PET D, which is translating the hourly bars, is telling us the market now wants to go lower. Okay? So this is your signal either to exit your trade and stay on the sidelines, or you could exit and go short, because it was giving you another setup. Go short. So now you just simply reverse. So on the very first setup, being long, let's just say you probably had a small loss or broke even. But the beauty of this technique and the beauty of the PET D is that oftentimes you can recoup what losses you had right off the bat. Okay? See how the PET D was giving you early warning that the trend had changed, and how all we had to do was just simply jump on board. And if we don't take the first setup, it's always giving us other setups as well. Now let me show you what happened Thursday, 2 days ago. Okay, just not to show you that we're not cherry picking the best examples. This just happened a couple of days ago. This is an hourly chart once again. Looking at this, we're on the West Coast, so we look at the market in Pacific Coast time. But if we're looking at an hourly chart of the E-mini, once again looking at this coming into the opening of the day on this continuous chart of the E-mini, someone would say, well, Steve, there's really no trend here. I don't have any idea what's going on, but it looks kind of like we're just kind of going sideways, and we have been going up ever since, so maybe we're making some support here. Maybe this is a double bottom on an hourly chart, okay? Maybe I think some reports going to be coming out. That's going to help the market. Also, this guy I follow in a trading room really likes the market. He says to go long at certain levels. So I'm going to be kind of bullish, okay? Once again, where are all our cues for the market coming from? From outside sources. Guys in trading rooms, interest rates, economic news, support and resistance, all the institutions. It's too complicated, plus it's too subjective. I know this from firsthand, trust me. This is why I had such a difficult time. There are some great traders who are able to trade this way, but they're probably the 5 or 10% of all traders. The rest of us, the majority, and myself included, have a very difficult time trying to base our trades off of outside news that is too subjective. So we need things that are more cut and dry. The best thing I know is just simply to add the PET D. And the very first bar was green, but look, now we had a consistent red bar. So on an hourly basis, coming into Thursday's opening, we knew we were going to be short. All we have to do now is look for that setup. Well, guess what? The very first hour of the day, there was our 2-bar setup. And look what happened, okay? We didn't have any news. We didn't know what was going on in the market. We don't follow any of that. The only thing you have to do, once again, you'll hear me say this a million times, is twofold. Listen to what the market wants to do and just simply jump on board. That's it. Trading is no more sophisticated than that. And more chances if you miss those setups along the way. Lastly, let's look at the Forex markets, because it just doesn't stop in those other markets. We can use this technique with anything. Here is a monthly chart of the Canadian dollar. Obviously, we've been going up since 2013. How did we know we were going to be going up, though? Well, if you apply the PET D back in 2013 on a monthly basis, the PET D was already coloring the bars green, okay? And you had this 2-bar setup already in February of 2013. Had you taken that very first setup, that's 4,500 pips coming into this year, $45,000 per contract. And remember, once again, we're not in any way stating that we have a system or a trading plan that says to stay in this long. We're just showing you how much you have to work with once you're in sync with the trend. And we can go here. I believe this is an hourly chart of the euro dollar from this past week. Okay, all we have to do is here see we're in a downtrend, but once we added the PET D, it's a lot easier to know at the very top that we were in a downtrend. And here's this inside day followed by another inside day. Had you taken that very first setup, well, 150 pips, quick pips to the downside. Now, here's one thing we like to say, because a lot of people say, well, Steve, this is great. I see it works well in stocks and in intraday trading here, but I don't trade that way. I'm basically a long-term investor. I like to trade on long-term trends. I like to look at the news. I like to find out what my companies are doing. I like to know what's happening in economic conditions around the world, because I simply hold things for 10, 20 years. So I want to know what's going on. Okay, we totally understand that. Now, guess what? The PET-D can be applied to long-term as well. Let me show you a chart here of the S&P 500 index going back to 1995, okay, going back over 20 years. As we look at this, we see all the peaks and valleys of the S&P, what the market has done, all right, in the past 20 years as you've been a long-term investor. We see here that we rose from 1995 all the way to 2000, and do you remember the dot-com crash when all the dot-com bubbles burst and the market came falling down, and we had that big crash going into 2002, 2003. But then things firmed up, and we flirted with the old highs again back in 2007, 2008 until the banking and financial crisis hit. And guess what? Another crash. For the next 2 or so years, we went straight down, and it wasn't until roughly 2009, 2010 that we've started to firm up again, and here we are right now. Now, a lot of people are saying, well, you know what? Are we calling for another crash? Things are kind of scary here. We have these really bad months, and then we kind of bounce back, and then we bounce back down again. Are we making another top? Should I be getting out? Well, we can apply the same principle of the PET-D to just simply tell us and translate for us what the market is doing. The only thing we have to change here when we're looking at long term is how we apply the PET-D. In other words, we need to see 3 consecutive bars of a different color to tell us that the trend has fully changed. Why? Because we're in a longer term, since each and every one of these bars represents a month. So let's apply the PET-D, all right? Now, if we look back here in 1995, the bars were all green. Sure, we had a couple of red bars here in 1998, but remember, we need at least 3 red bars to tell us we are in a downtrend, in a bear market. And we didn't get that until 2000, well before the dot-com crash hit in. Sure, we didn't get out at the top, nothing does, but roughly at the end of 2000, you could have been out of the market, or if you're more aggressive, you could have gotten short. Either way, you would have bypassed all of this debacle here to the downside coming into 2003. Now, once you see 3 green bars, that's your signal to get back in. You can invest in anything. You can invest in anything that you like, as long as the bars are green and it meets your standards of whatever you'd like to buy. And until we have 3 red bars, we're still in the market. Now, here's the top in 2007, 2008, and here we have 3 red bars. Sure, we did not get out at the top. If anyone ever promises you to get out at the top, once again, I would run, because it's very difficult to do that. But wouldn't you have liked to at least bypassed all this tremendous sell-off right here coming into 2009? Well, you would have with the PET-D, because all the bars were red. Now, at the end of 2009, we had 3 consecutive green bars, and this is the way it's been ever since. Sure, we have 2 red bars, 1 red bar, a couple of red bars, but we have not had 3 consecutive red bars until, well, I specifically left this past month out, because all of our members in our course know what April is most likely going to conclude at, but it's up to you if you want to become a member. This is for all the members of the course to know. This is how valuable this tool is. So once you become a member of our PET-D course and have this tool, you can know long-term if you're in a long-term downtrend. Think how this could have helped you going all the way back 20 years. You think it would have helped you to stay out of the dot-com crash and the great banking financial crisis back in 2007, 2008? I think so. It's helped our members. So let's recap. We shared with you a simple trading technique. That's the 2-bar pattern, the inside day pattern, okay? Now, this can be applied to virtually any time frame, any market, any direction. So it doesn't matter if it's actually an inside daily bar. It can be a 5-minute bar, a tick chart, or a monthly bar. I showed you examples in all those different time frames. But the point is, it's not enough just to find that. You have to be in sync with the trend. So how do we know that we're in sync with the trend? Well, by using the PET-D, that pinpoints these quick momentum moves in any direction in any time frame. Okay? The PET-D is the best tool in my over 35 years of applying this. It's really helped me be in sync with the trend. I use this on a daily basis in my own personal trading, so I would not teach or try to mentor someone in something that I don't personally use. So here's what we're offering today for all the attendees today of the summit. This is our roadmap for any market, the PET-D, the Primo Early Trend Detector. It's a proprietary color bar algorithm, but this includes the add-on for all the MetaStock users. Included in this course, we give you 2 continuation trading techniques. We also give you 2 pullback trading techniques, along with a trailing stop technique. Okay? Remember, you can apply this to any market, any strategy, in any time frame. So in other words, I don't want you to think and say, well, Steve, I do look at news events. I do trade news. That's fine. We're not going to tell you how you should trade. That goes entirely against our philosophy. We don't tell anyone what they should or should not be doing. We just teach you things that have stood the test of time. But we really feel if you are in sync with the market, whatever technique or its plan you're using, if it's based on news or if it's based on the full moon, it doesn't matter. We feel you will have a higher level of consistency if you are in sync with the PET-D. Okay? Let me show you what I mean here. I know a lot of you will say, well, this is a great technique. Boy, I never knew about this inside day pattern, but you know what? I really don't need this tool because I pretty much know when we're in an uptrend or a downtrend, so I'm just going to look for this 2-bar pattern and be in sync with the trend. Okay? And this is what most people do, and they'll say, well, looking at this older chart of CRM, obviously we're in a downtrend. We're making lower lows, lower highs, and guess what? Here's a 2-bar inside day pattern. So that's telling me to sell, right? After what I attended Steve's presentation, and that's great. So I'm just going to sell, and I'll probably make some nice money here on this trade, shorting this trade. And then look what happens, okay? This is what happens to most people. I'm not saying that it won't work, but you won't have the higher level of consistency that you would with the PET-D. Why is this? Well, if you had the PET-D in this scenario, you would have simply added it and seen that that 2-bar inside day pattern needed to be both red. Both of those bars needed to be red. As you can see here, that one of them was colored green. So that did not give you a valid setup to go short because the market was telling you that we're not in a full-fledged downtrend yet. And even better than that, had you had the PET-D, you would have not taken that setup, and look at all the other setups you could have had. If you had waited a couple of days, you had a nice buy setup, and if you missed that, well, guess what? You had another one, and even another one. So that's why the PET-D is so powerful. It really gets you in sync with the trend. Many times I know you think you may have a way for finding the trend, but as I stated in the beginning of this presentation, most trending techniques are a day late and $1 short. The best thing I know for finding out what the trend is in advance is this PET-D tool, which I was introduced to some 35 years ago. So here's the special discount we have for all the attendees today for our Online Traders Summit. Okay, remember, this includes all the add-on that you can have for MetaStock. This includes this where it automatically colors the bars, either red or green. It includes 2 continuation trading techniques, 2 pullback trading techniques, as well as a trailing stop technique. And something I didn't cover before, this also includes lifetime correspondence with myself, because once you sign up for any of our courses, or whatever you're signing up for, it doesn't matter, I'm your mentor for life. So you can always contact me. I'll answer any question you may have. If you're having difficulty trying to understand how to apply the PET-D, I'll be there right alongside with you trading it. So there's no worries about feeling as if, well, I got this now what do I do? You can always access me through my email, and I'll be contacting you as soon as possible. So you have lifetime correspondence with someone who's been trading this for over 30 years. All right, now the PET-D is so powerful and so popular. In fact, we have hedge funds that simply want to buy this and license it for themselves. This usually runs close to $3,000. For all the attendees today, we're dropping the price down to a one-time fee of $497 with $97 per month, okay? But this is a special Online Traders Summit discount. This is only going to last for the next 24 hours, okay? Now, we know a lot of people say, well, Steve, what if I just want to simply purchase it outright? Well, the full price, the lifetime access to the PET-D is $24.95. And we have payment plans for that as well if you'd like to situate some type of payment plan. But the special we have for all the attendees today is one lump sum payment of $497 plus $97 per month. But remember, that is only lasting for this day because of our association with MetaStock, Jeff Gibby, and with the Online Traders Summit. So here's how to access that. Here's the information you would simply need. Let me go to the next page here. Contact my sister site, which is Pro Trader Strategies. They market and promote all of my courses. As you can see there is their email address, trading@protraderstrategies.com. MetaStock.com. You can also call them directly. If you'd like to set up a payment plan, you can call them at 310-598-6677. And as you see at the very bottom, that is the link that will take you to that special one-day discount, okay? That is not live, though. You have to copy and paste that onto your browser. But if you look over in your chat box, I believe they've posted a live link, and all you have to do is simply click that on, and that will take you to the discounted deal we have for the next 24 hours, okay? So I'm going to leave this information on the screen. I believe I have about 5 minutes for questions. If that's okay, Jeff, I'll open up the question and answer box and try to answer as many as possible. Let's see here. Thank you, Steve. You showed the good examples. What about the bad ones? Well, actually, I did show a bad one. If you recall that E-mini, that's one where it went up and it looks like he had a profit and then it quickly changed. But that's the beauty of it. You know, as I stated, I think 2 or 3 times, this is not a 100% system. It's not 100%. It's like saying, well, you know, is a moving average a 100% system? A moving average is simply a tool. Okay, how you apply it is what makes it consistent. It's the same thing with the PET-D. The PET-D is not a system. It's not a strategy. It's simply a finely tuned trend directional tool that will get you in sync with the market. Okay. Now it is a proprietary. I see some people are asking, what is the formula? What's it calculated or based off of? Since it's proprietary, all I can tell you is that it's based off of momentum. Okay. And I know a lot of people have probably done Google searches on it. There's a lot of people, since it is such a popular tool, and we've had so much success with it in terms of testimonials. You can go to Pro Trader Strategies and read all the testimonials of people who have become consistent for the very first time. Some people trading 10, 20 years, and for the very first time they've become consistent using the PET-D. Everyone's trying to figure out, and everyone says they know what it's based off, either a moving average or an oscillator or whatever. And there's a lot of talk about it on the internet. All I can say is that no one is correct. It is proprietary, but that wouldn't make any difference. Even if someone knew the formula, I can almost assuredly say that you would most likely lose money, because whether you know it or not is not what matters. What matters is that you know how to properly implement it and how to implement it with a strategy or technique. And this is where people have difficulty. So as your personal mentor, you have roughly 39 years of experience alongside with you, teaching you how to apply the PET-D. So this is what you get along with the course. Okay. Let's see, I have version 11 of MetaStock. The add-on will work with this old version. Yes, it will. I believe it works with that as well. I would, for any technical support or technical issues, contact Pro Trader Strategies. They can tell you, but I believe it would work fine. Is there someone I can talk to get info with a payment plan? Yes, there is. As you see the phone number right there on the screen in front of you. Remember, they also have payment plans for the full, one-time fee. So you can have that as well and structure some small payment plan and also have payments structured to your own liking. But Pro Trader Strategies will put that together for you. SP asks, when does the bar color form? After the candle is completed? That's a great question. No, it is always calculating intra-bar. So in other words, let's say you're looking at a 5-minute bar chart. Well, the minute that new 5-minute bar opens, you will see a color that is assigned to it. Even if it's only been open for 10 seconds, there will be a color because it will already be calculated. Now, as the bar is being formulated, it may change colors. You don't see this a lot. You usually see it, change color once and then it stays there. Oftentimes, if you have a really crazy market, like say after some news event has happened, if you have a long enough bar, you'll see the bar going back from red to green because there's a lot of volatility. But most times the bar, once it opens at a specific color, will stay there. And then here's the main thing I want to stress to people, is that it does not repaint itself. I know there's a lot of tools out there where you look and you go, boy, this is fantastic, and then you apply it, and then lo and behold, you look and you say, how come the bar is not the same color it was when I first started using it? Because they repaint. The beauty of the PET-D is that it never repaints. Once the bar closes, it stays at that color. So if it closes at green, it will always be green. If it closes at red, it will always be red. So that there's a number of ways to apply it. This, once again, is what we teach in the course. Most people would not know how to apply this to the trading, but there are a number of techniques on how to use it with using where the specific bar closes, okay? Serge asks, do you need the 3-bar confirmation for the inside day setup also? Good question, Serge. No, you don't. The inside day, you don't need that. All you need is for those 2 bars to be that specific color. The 3-bar confirmation is just for the longer term, okay? That's mainly for the longer term use because we're looking at monthly bars, we want to make sure that the trend has changed. So we have a little bit more confirmation. But if you're using the smaller time frame you go, you don't need that confirmation, okay? Ken asks, you said it will work on crude oil ticks. Yes, it works on any market, any time frame, and any direction, okay? Nadir says, I trade weekly. For the monthly, you suggest waiting 3 bars. Same with weekly? Well, you can, that's a good question. The weeklies are a little bit out, but you don't have to. It's up to you. Remember, once again, we're an educational company. What we want to do is provide you with the tips and techniques that have stood the test of time, things that turned my trading around nearly 40 years ago. And that's all I'm trying to do. I'm trying to share the same things and teach you how to use them correctly. Now, there is no one way to use them. That's why we're not saying that this is a system or a strategy. These are simply high probability edges that you can apply to any strategy you have. You can have one of Dr. Barry Burns' strategies. You can have Stephen Bigelow's, and they will, I really feel confidently, they will increase their odds for consistency, okay? So you're just finding a great way to be in sync with what the market is. It's telling you, and then you're jumping on board with some structure. How you want to apply, if you want to wait for 3 bars, that's fine. If you don't want to, that's fine. We have students that use either way. I'm just going to take one more question. Sorry, Jeff. Let's see, does this work on...
You've got like 5 minutes. So.
Okay, I'm sorry. I don't want to step on the next time limit, so I know what that's like.
You're fine. Take your time.
Okay.
You got 5 minutes.
Okay. It says, can I use it for 5 minutes, 15 minutes, Forex trading? Sure. We have a number of traders. In fact, we have a trader out of Texas who uses this just on 10-minute Forex currency pairs, and he uses it with another strategy of ours that trades candlesticks. So if you're a Stephen Bigelow member, you could apply that with that as well. Once again, it's just a great tool for getting you in sync with whatever the market wants to do. Okay. Is it using any volume data or any price action or momentum? Well, I can tell you what it isn't using. It does not use any volume. Okay. In fact, I stopped using volume roughly 30 years ago. It's not based off of any news or any specific pattern. The only thing I can divulge is it's based off of momentum, how we view momentum. And it's a calculation that calculates momentum. Okay. And I'm sorry, that's about the only information I can give you because we want to keep it in-house because there are plans to possibly lease this out, go into a leasing type of format. And if we do that, it's going to be a lot more expensive, trust me, and it'll probably be something that you have to pay each and every quarter to renew the licensing fee. So I would suggest if you're anywhere interested in this, that we have a great discount today with the Online Trader Summit. And with this particular special, you can really pick it up at a great price if we do happen to go this next year onto a licensing type of format. Marcin asks, does it fit to Omnibro? I believe that's something you probably have to check with Pro Trader Strategies since they handle all the tech support. Okay. Let's see here. Can you give us a peek look at Monday? Thanks. I don't have, this is a static PowerPoint presentation, but if you're looking at the daily bars, I can tell you that the last daily bar was green, okay? So I can give you that information. Now, that's not enough information, but the last bar was green, and so it's up to you. You may get a little bit more clue of that on our Twitter page as well. So, but remember, our Twitter page has some information as well. But there's a lot of examples I've shown from this past week using this on a 10-minute chart in the E-mini. So feel free to visit us on the Twitter page. But remember, this one-day special with the Online Trader Summit is just for the next 24 hours. So if you really want to take advantage of this before it goes back up to close to 3,000, I would really strongly consider this. Okay. One more question here. Yeah, a lot of people are asking for different platforms. First of all, it works great with MetaStock, so there's nothing you have to worry about there. I would contact Pro Trader Strategies for any questions on that. Can you scan? Yes, you can. You can scan with this, or you can show you all this. But remember, it's not. I don't want you to think that you're scanning for a system. You can scan just to see, the pet D with it, but this is just a trending tool, okay? How you apply it is what comes through my personal mentoring in the course, okay? So right now, all it's showing you that the market wants to go up or the market wants to go down. Now your second question is, what do I do? That's where 39 years of experience comes in, okay? And trust me, I use this on a daily basis. I wouldn't be leaving home without it because it's that important to my personal trading, okay? I think we're just about out. I don't want to step on the next speaker's time, so I want to thank you all for attending. Remember to contact Pro Trader Strategies with any questions. Call them up for putting together any type of payment plans. And it's a great tool I use personally. I'll be there with you every step of the way to teach you how to apply it correctly and to hopefully increase your odds for success and make your trading consistent, okay? Thank you so much. Thanks to Jeff, everybody at the Online Trader Summit. Okay, I'll see you next time. Back to Jeff.
All right. Thanks, Steve. Again, that phone number, if you want to get a hold of them, is 310-598-6677. All right. Very cool. Let's go ahead and I'm actually the next presenter, so let's go ahead and kind of get back into this. Want to say a quick thank you to Steve and the other Steve and Vince and everybody that's kind of presented today. It's been a great session. We're getting a lot of really good feedback from you, and it really has been a very solid, thorough session. So thanks for coming in, and thanks for the presenters that are coming in as well.